Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Landon Swan, co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. It's great to be here.
All right. So I mentioned the shares are up about 48% this year. And we've seen some reports, Landon, out of some of the competitors in the discount retail space that have actually been pretty good this past quarter. Are you guys seeing the data that kind of sets this up, the rally that we've seen?
Yeah, I mean, if you look at what Five Below and Dollar General put out, I mean, they put out good numbers, good reaction from investors in the street. And I think that probably raises expectations for Dollar Tree. They're not exactly the same, company as those other two, but obviously very similar. And so if they're doing well, you'd expect Dollar Tree to do well. I can say, though, that in the data, it's just in what we've got, they're the weakest of the three. Dollar Tree is the weakest of the three. So this could be kind of a setup, I think, for, higher expectations and maybe not like a devastating miss or anything like that, but just like oh, they're not as good as we thought they may be. So Five Below, as you can see, very strong numbers. Dollar General, pretty good, and then Dollar Tree lagging. And, I think they've had a good run, like you talked about, almost doubling since March. And, the stock is doing really well. It's, kind of shrugged off a lowered guidance last quarter on the report, initial sell-off, but it's been churning back since. So a really strong run. The sort of the downside that we see, though, is that they're really not doing a lot on the digital side of things, and we're getting a lot of strong data from Dollar General, Five Below, on the digital side of things. They're moving in that direction. Now, Dollar Tree's got that Uber partnership that they started up, so that's something. But they're still mostly relying on foot traffic, not a lot of online sales, and they are sort of the lowest on the totem pole when it comes to quality or perception. Now, they do have these new multi-price stores. They're not tied to being, I think, $1.25 anymore. So they're allowing themselves to go up in price, which is good. Five Below went through the same thing not too long ago. I think it's just kind of, this should be taught in business class with, general inflation continuing year after year. Don't name your store something with a price in the name of the store. It's going to get outdated eventually. So Dollar Tree is going through that pain point right now. But of those stores that have converted over, they're actually doing really well. And what's interesting is they've added about 2.6 million customers, with the biggest gain coming from people in the 100,000 and up salary bracket or income bracket. So the more affluent customers are actually their biggest growing one. I think that kind of says a lot about how the consumer is being squeezed right now. They're going there for essentials and for seasonal items. So overall, I think that Dollar Tree is doing okay. I would say that the price is mostly fair where it's at right now. It's been on an incredible run, but I do worry that given what the stock has done and what these other two companies have reported, the bar or expectations might be just a little too high, especially given the data that we have, which is not terrible, but it's just not as strong as what Dollar General and Five Below have reported.
Landon, the multi-price strategy is what they call it. That seems to be working. A little bit of traffic recovery, revenue growth 11.3% in the first quarter, same-store sales doing well. They seem to be getting back to who they are. But Landon, you mentioned the stock bottoming in March. You know what they did in March? They got Family Dollar off their balance sheet. They announced it in March. They've closed it recently. Isn't that the addition by subtraction? It seemed like from the minute they announced this deal, it was a weight around their neck, and they finally were able to get rid of it. And when they announced it in March, that's when this stock started to recover, Landon.
Yeah, it's incredible. I mean, if you look at that, again, another lesson for business school, that's incredible. The addition by subtraction, that was a weight on them for a long time. Anytime we would profile Dollar Tree, it was always, Dollar Tree and then Family Dollar. And every single time Family Dollar's data was worse. So that removal was fantastic. Getting that off their books, selling that off to private equity, I think is the way to go. So obviously a big move, but still the stock has almost doubled since that time. And as you can see on this chart, I mean, our data is almost dead in line with the stock price right now. And there's obviously a little bit of a transition there with Family Dollar going out of it, but still, it's interesting to see that even with that double in price, our data is basically saying, yeah, this is about right. Again, my main concern is just that competition is, you can't help it as an investor. I mean, when Home Depot's about to report and Lowe's just came out, you give that, you think about that. When Walmart reports and Target's about to come out, you have to look at those. They're so similar. And again, these companies are not identical, but they're very similar. And so the fact that Dollar General and Five Below both did well, Five Below raising guidance in addition to having a good report, you just have to kind of set yourself up mentally for Dollar Tree to do really well also. And they're the weakest of the three. So I'm not saying that it's going to be terrible. I just think that investors need to curb their expectations a little bit. And I wouldn't be surprised with a decent report that sells just a little bit. If I had to predict something, that's what I'd say. I don't see a huge move coming to the upside or downside, but I'd say most likely you're going to get an okay report that sells off slightly just because of the raised expectations.
Landon, you mentioned, the competition that's in this space. Now they've got partnerships, right? They're partnering with Uber Eats for delivery. But this is all about foot traffic at this point, isn't it? With a lot of these names, they don't do a booming business on e-commerce, but is that an opportunity for Dollar Tree moving forward? And that's maybe why we've seen some of the gains recently.
Yeah, I think so. I commend the effort with Uber Eats. I think it's a good try. I don't know if it's going to work because you're talking about pretty low priced items, and generally speaking, when you add on a convenience fee of some sort, be it delivery or Uber Eats style delivery, you feel it less the more expensive the item is, right? It's just percentages. So as you're talking about, a store that sells things for $1 or $3 or $5. You're really going to have quite a large order to make Uber Eats delivery make sense with the fees that they have. So I think it's better than not doing anything. I don't know if it's going to work, but I like that they're trying it. And what we've seen with the digital data is a vast difference between the three. Dollar General and Five Below have a very strong digital presence. Dollar Tree, not so much. And this is a step in the right direction. But I think the core of their business is foot traffic. They have to get people in the store, walking around, picking up things they didn't think about. And that's the other thing. I mean, if you think about, getting something delivered, it's because you want that thing. But with all of these stores, part of the sales experience or part of the reason that they can make money is you're walking through the aisles and you didn't plan on buying this, but since you're walking by and it's a decent price, you grab it. You don't really have that opportunity if you're going in with a delivery option. So it's a tough one for them. I can see why they've been slow on digital, and this is a good attempt. I don't know if it's going to work, but I'm glad they're trying it. But foot traffic's the key for them, and from what we've seen, it's just a little bit weaker than the other two.
Yeah, it's almost like that why Marshall's does so well. It's people going in there just kind of looking around and then grabbing stuff left and right. That's the surprise that you buy more when you actually go in there. All right, great stuff. Great data as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder of LikeFolio, breaking that down for us. And